Hi there, good afternoon. You've tuned into ET now. This is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And the markets are doing absolutely nothing. We're really trading pretty flat from the word go in today's trading session. Tad bit in the negative territory. A news flashing on the bottom of the screen. Let's take note of that one. And that's TTK Prestige. They said that the board has, I beg your pardon, TTK Healthcare. The board has gone ahead and approved the delisting proposal, and they're saying that the proposal is in interest of the shareholders, but the stock is not taking that too kindly. 4% downtick coming in for TTK Healthcare as we speak right now. But apart from that, let's take a look at what the market is looking like. Like I mentioned, flat day of trade coming in benchmark indices as we speak. Let's take a look at what Nifty Bank is doing, and that one has moved a bit lower right now. It is trading flat with a positive bias of the day's highest point. Ditto coming in for the broader markets as well, that is mid cap as well as small cap. If you look at the advanced decline ratio, currently it is still it is pretty neck to neck, let me put it in that way. But on the sectoral indices front, it is pharma index that has taken a knock. And what will be very key to note, Vinny, is the fact that all the sectoral indices are now gradually moving towards the negative territory. So basically, we've given up all those gains that we had seen in the earlier on in the day, with the pharma index taking a knock of about 1.3%, cooling off from those, you see a gaining streak. You have FMCG index, realty index, all of them seeing declines in today's trading session. So subdued trading session till now, 2 more hours left to go, and for now the picture is not looking that great.
Absolutely, picture is not looking that great, but let's just talk about some of the buzzers and movers on the back of either technicals or on the back of news flows. And on the technicals today, we have Vaishali Parekh from Prabhudas Leela that are joining in with us, while from the research team we have Vamakshi as well as Asisha joining in with us. A very good afternoon to all three of you all, and let me start with the first stock as always, and that's going to be Container Corp. Now this stock is in focus today because we're seeing an upgrade that is coming from Goldman Sachs on the stock. They've given a buy rating from a previous neutral rating for the company. Now, other than that, what they're highlighting in their note is that their target price, also they have upped their target price to 720 rupees per share from previous 670 rupees per share. They believe the key beneficiaries for the rail containerization, dominant market share in their India rail logistics will work out well for Container Corp. They expect a 15.5% earnings CAGR growth for the next 2 years with a healthy cash flow generation as well. They believe stock is well positioned for an outperformance as a positive catalyst will start playing out for Container Corp. And on the back of that, we're seeing that the stock is buzzing in trade, up 0.5% as of now.
All right, that's Concor for you, soaring or surging in trade in today's in session because of Goldman Sachs note where there's an upgrade to buy. But Vaishali, do you see this one holding on to good gains going ahead? But not to forget the fact that Concor also moves a lot on news flows. It's one of those divestment candidates as well.
Very good afternoon. So actually, technically, it matches the view because today we saw a gap up opening with good volume. And well, the risk-reward ratio is also very favorable. We've seen signs of reversing and bottoming out at 585, 590. So once it sustains above 620-25 levels, I think the stock will gain further momentum and strength for the target of 650 to 680.
So that's the view coming in on Concor, but let's talk about Mastek, and that one is soaring in trade today. They've beaten street estimates in the quarter gone by. Their UK business has seen a strong bounce back as well, and the management is expecting the growth to accelerate. Just key highlights from Q4 earnings, given the fact that the street has now digested the numbers. If you look at the constant currency revenue growth, it was higher by about 5.3% on a quarter-on-quarter basis. The EBITDA margin has actually expanded from 17.3% to 17.7% on a quarter-on-quarter basis, and their 12-month order backlog at the end of Q4 was at around $280.3 million, which is higher by about 6% sequentially. But we spoke to the management of Mastek, who basically kind of gave us a guidance or was very positive on the growth prospects going ahead. Let's hear out what the management says. But before that, Vinny, we'll have to take the view of what Vaishali has to say on Mastek, given the fact that Mastek is surging in trade today. Vaishali, based on news flows or based on the earnings, but do you see this growth continuing?
I think so, because we've been seeing this stock, and right from the day start, we saw that there was good volume, and well, it's coming out of consolidation. We've seen a long consolidation right from 1600 to 1750 levels, and right now it is about 1800. So I think with the volume that we are witnessing and with the chartical formation, I think the stock is out of the woods and it's ready for a target of 2000.
Ready for a target of 2000. That's what Vaishali is saying. Mastek is looking on the charts. But let's go across and then listen into the management on what is their commentary coming in on the margin levels. What are they expecting in terms of ramp up as well? We were joined by Hiral Chandran, CEO at Mastek. Let's go across and listen in.
We are comfortable with the high teens kind of range. Definitely, we'd want to actually demonstrate strong, consistent quarter-on-quarter, year-on-year growth. That's our priority, while maintaining that margins in that kind of 18% range. We don't guide necessarily for margins or revenue, but we're comfortable in the range that we're in and in that high teens, because that allows us to invest back in the business. Our UK business is quite unique, as we've discussed in the past. There is very underlying, national infrastructure importance type of work that we do in immigrations, borders. In fact, one of the deals we won is in the biometric space for managing legal immigration into the UK. And the type of work that we do, we believe will continue to be resilient. We have, having said that, diversified in manufacturing and a couple of other industries like retail. I think the movement of dependency on UK has definitely come down, but UK continues to be an important sector for us. So we'll see continued growth in FY24 even from that geography, while definitely faster growth in Americas and in Middle East, relatively speaking. So we feel that order booking is just going to go up from here. I mean, some of the foundational work, like I said, we've done in the last year or so in terms of recruiting, marketing, our brand recognition, our people element of it, right? Our attrition has dropped down 700 bips to 21%. We probably look at another 2-3% of reduction of that.
All right, that's Mastek for you, surging in trade, 14% uptick coming in for the counter as we speak. But let's talk about paint companies, Ashesha, and they are not left behind in today's trading session.
Absolutely, and all of these counters are in focus today because of a note that has come in from CRISIL, where they are very optimistic about growth plans of the company. They say paint makers could generate anywhere between 10 to 12% growth in fiscal 2024. This will be largely driven by volume expansion on the back of healthy demand coming in from sectors like construction, real estate as well as automobiles. As far as margins are concerned over here, also they are pretty optimistic. They say moderating crude-linked input prices will ensure operating margins could remain stable in the range of 15 to 16% in fiscal 24. Nearly debt-free balance sheet of most of these paint companies will continue to support the credit risk profiles. Despite all major companies being on aggressive capex spree, important to note that most of these companies have been facing intense competition or are likely to face intense competition. And in the backdrop of this report that has come in from CRISIL, all of these counters are buzzing in trade today.
Let's keep an eye out on the paint stocks. But Mirza International, Mamakshi, this one is also running in trade. What is the reason behind this?
Not just today, since the past few days. In fact, in the last 5 sessions, the stock has risen as much as 60%, reaching nearly lifetime high levels. Now, the company's demerger and listing of red tape business is the reason why this counter is in focus. Now, remember, NCLT had already given its nod on March 23rd, and in fact, the stock has been trading X of its red tape business from March 29, up nearly 65% since then. Now, this rally is seen in this counter, given that there has been a valuation catch-up with the net asset value, which was fixed on April 15th. Now, the analysts, however, are concerned that the rally may wane out as tannery leather business is not quite attractive. In fact, the tannery business is subject to regulatory hurdles. Now, investors are watching out for the red tape listing that is pending. The listing is expected in the next 1 month, and it is expected to come in at a premium. In fact, the shares have already been started credited via CDSL, and we're also awaiting the same from NSDL as well, and then the listing approval is expected after the complete allotment. So this is the news flow surrounding Mirza International, and that is the reason why the stock is up and away in trade, 9%, nearly 10% higher as we speak.
All right, that's Mirza International soaring in today's trading session. No doubt on the index level, we are pretty flat, but we have individual movers in trade today. But on that note, Vaishali, Prism Johnson, how is this one looking on the charts? Do you think that this will outperform the index in near term?
I would think so because as you see, the stock has already given us a return. I mean, we had recommended the stock right from 100 levels to our clients, and right now it's soaring high. So I think the way the strength is seen, this is in all likelihood going to do targets of 145. So I'm bullish on this stock.
Okay.
Keep an eye out on those levels for Prison Johnson. Moving on, let's talk about Prestige Estate. This stock is in focus on the back of a brokerage note coming in from CLSA. Now, Prestige Estate, what CLSA is saying, they're maintaining a buy rating on this one, given a target price of 566 rupees per share. They say that the highest ever pre-sale and collection in Q4 and FY23 is something very positive for the company. Prestige has maintained its pre-sale target of 25,000 crores in FY26 as well. And overall, targets are quite aggressive from the company and may lag, but still would be able to achieve at a significant scale as well as what CLSA is highlighting for Prestige Estate. They said that the valuation are at a discount compared to its peers and is unwarranted. So yes, keeping an eye out on Prestige Estate, target price of 566 rupees per share is what they've given. Stock is buzzing, trading almost at its highest point as of now.
All right, moving on, let's talk about Liberty Shoes. And if you look at the chart of Liberty Shoes, Vaishali, year to date, the performance or rather the returns are absolutely minuscule, that's 3%. But the last 1 month, the stock has seen a jump of approximately 30%. Where do you see this one headed from here on? Do you think it will sustain that momentum of giving high returns in the near term?
So exactly, today's stocks, what I've chosen, they're all showing signs of reversal, most of them. So what we have seen, Liberty also, the stock right from 400 has made a low of around 180. Now we see the stock trending and making a higher bottom formation, and it's also moving past all the crucial small-term moving averages. So stock, if it continues to sustain like this, I think I would be looking at a target of 285 to 300 once again.
All right, so that's the take coming in on Liberty Shoes. But moving on, let's talk about the stock of the day, and that is Tata Motors. And why is Tata Motors in focus? Because they've come out with their plans for JLR, where they said that the JLR will be investing about 15 billion pounds in EVs over the next 5 years, with the first EV due in 2025. On back of that, the stock was trading higher by approximately 2% or so. Investec has said that the Lagarde JLR's EV a step in a right direction and should help address investor concerns. They've noted that despite the high capex, JLR guided for the net cash position by FY25 versus brokerage estimates of about 2 billion pounds net to debt. However, you have Morgan Stanley there saying that JLR's view of double-digit margin by 2026 is bullish given a high competitive market. They're saying that the Tata has been raising prices in India, but approximately 60% of the total revenue is from JLR, whose top market of China has actually many rivals. So you have Tata Motors that is in focus on that particular development in today's trading session.
Let's move on and talk about PNB housing on the charts. Vaishali, when you look at the chart move coming in or in terms of the pricing, 9th March it hit a 52-week high. Post that, we've just seen a correction coming in from 542, now it's somewhere around 460 levels. What are the charts indicating for this one? Is this correction a time to buy the stock, and could we see a run up now?
I think so. Actually, the stock has bottomed out at 400 levels and currently again getting into a new round of momentum. We need a follow-up with a good volume also. We are seeing a marginal pickup in this volume. So I think the chart, it looks favorable because in the morning we saw some pickup coming in, and I think it's well placed. So with a stop loss of 410, the stock can again give a bounce back at least up to 480. So that would be my trading strategy.
All right, so that's the take coming in on PNB Housing. But Shesha, auto companies, apart from Tata Motors, why are the other stocks in focus today?
Well, yes, the whole host of counters are in focus, and that is because of a JP Morgan note that has come in this morning. First up, they've spoken about the demand profile, where they say rural demand is catching up now with the urban demand. Two-wheeler demand normalization, they believe, could continue in FY24. As far as two-wheeler demand is concerned, remember it is still below that pre-COVID level, but momentum is improving and inventory continues to be healthy for two-wheeler segment. They also say that potential outperformance in rural demand is normally seen as a positive for Hero MotoCorp as well as Maruti Suzuki. As far as their preferred bets are concerned, they say TVS, Bajaj Auto and M&M are their preferred bets. So on the back of this JP Morgan report that has come in, all of these counters are in focus today. TVS Motors not reacting much, but Bajaj Auto and M&M, both of them holding with gains of anywhere between 0.3 to 0.7%.
Okay, that's the auto space for y'all. Keep an eye out on all those names as well. Vaishali, let's move on to Taj GVK. Not everyone talks about this in the hospitality space when you look at it, but this one has been one of those silent movers because 20% uptick just in the last 1 month. Holiday season is just beginning right now. Could we expect a good run up, given that everyone will be going out spending on hotels as well?
Well, hotel industry on the whole, even last time when we had, I was on the show, I had recommended Indian Hotel and we have seen a good bounce. So overall, hotel scenario looks promising, and today I've chosen Taj GVK because we've seen good volume happening today and the stock is showing good trend. So I would say that by now, even in decline, I would look at a positional target of 245 from here on.
Moving on then, let's talk about Paytm, Vamakshi, and this one is a buzz in today's trading session.
Well, sure. Absolutely, this counter is gaining momentum in the trading session today, and here's why. Well, we have a note that has come in from Motilal Oswal. They've initiated coverage on this counter with a buy rating. In fact, they've given a target price of 865 per share. Now, Motilal Oswal is saying that the company has a two-pronged strategy, and this could in turn drive profitability for the counter. EBITDA is expected to break even in FY25. In fact, the company has grown its monthly transacting users, that is the MTUs, and as a result, the company also has a very huge cross-selling opportunity. They're also expecting the disbursements to surge for the counter. They're expecting a steady 64% CAGR from FY23 to FY25, thus driving the mix of financial revenue upwards to 31%. The contribution margin is also expected to improve to 56.8% by FY25 from 30% that we saw in FY22. So given all these factors, a big thumbs up that has come in from Motilal Oswal. They've given a buy rating on this counter, and that is the reason why the stock is surging in trade today, 2.5% higher.
Keeping an eye out on Paytm today on the back of that brokerage note. Vaishali, on the charts, JSW Energy, how is this one looking like? What are the targets that you're keeping an eye out on?
So JSW Energy, once again, we see compared to the front line, we are seeing sideways move in front line, but it is more momentum seen in JSW Energy. And today also with the bullish candle formation that we are witnessing, I think 250 is a good support, and I would look at a trading target of 280 to 300.
That's the take coming on JSW Energy. But Vinny, today not only are the ones that have reported earnings are buzzing in trade, there's another group of counters that are buzzing.
Absolutely, and let's just
summer effect.
Don't know about that, but they all are buzzing in trade, and that is innerwear stocks. Whether you look at Lux Industries, Rupa, Dollar Industries, all these are buzzing in trade in the range of around 7 to 12%. And the main reason that we see and what we understood analysts as well is that one, the channel destocking that was happening here, that has been done, that is over now. Q4 results for these companies are expected to be quite strong. This is one of the main seasons for the company. So yes, these companies do start doing well as well, and Q4 is expected to be quite strong. And let's not forget the commodity prices. Yarn prices had seen a sharp increase in the last year, and now they're stabilizing. So yarn prices stabilizing, raw material costs stabilizing. Obviously that in the end turns out to be a bit supportive, at least in terms of their margins as well. So stable yarn prices as another factor that we should be keeping an eye out on. Strong Q4 numbers are what we're expecting from all these companies, and like you can see, Lux Industries up 13%, Rupa and Company up 9.25%, and Dollar up 2% in trade as well, Sharon.
All right, so Q4 likely to be strong for these companies, apart from it being summer season as well, looks like it. But Vaishali, looks like you are betting on back to school theme, that is Bata. Do you think apart from that reason, there is further scope for this stock to move higher on the charts?
So Bata, in fact, after a very long time, we saw a good corrective move. And after a good consolidation, we've seen this stock rise from 2000 levels to now a low of 1400. So from 1400 today, we have seen that it's coming out of the range. So I would say that this stock looks favorable, at least for a bounce up to 1500 levels. So with a 1420 stop loss, I would recommend a buy purely over a trading strategy for a target of 1500. And if it sustains, then we can have a reload.
All right, so that's the take coming in on Bata India. But let's talk about SpiceJet and why is this particular counter in focus? Because Jeffrey's in the management of SpiceJet, and they've given a note on the key takeaways from that management to me. They're saying that the company is focusing to ramp up cargo business. They are aiming to grow to about 28 to 32 cargo planes in the next 3 to 4 years versus just three currently. They're also focusing on expanding presence in the tier 2, 3, 4 towns, and also they're saying the smaller towns offer stronger RASK and occupancy levels as well. They've also said they're focusing on increasing their international mix to 40% from 20% currently, and they're also aiming to unground their grounded fleet over the next 6 to 12 months. So on that back of that particular note, your SpiceJet, that was a buzz in today's trading session. You can see that spike on your screen, but for now, it is actually seeing subdued trading session, 0.8% uptick coming in for SpiceJet today.
Okay, let's move on and talk about Lemon Trees. That one is a buzzer to trade as well. And Vaishali, how are the charts looking for this one? Right time to pick this one as well? And similar to Taj GVK in terms of charts.
Definitely. That's the reason why I chose one more hotel stock, because as I said, overall the hotel stocks are doing well. Today also, since a couple of days, we are seeing exceptionally high volume in Lemon Tree also. So I would say it's already run up during the day. So I would say 82 should be the stop loss, and I would look at a target of 93 to 95.
All right, moving on then, let's talk about aluminium stocks then, Ashesha, and why is this particular counter in focus, or rather the entire pack in focus in today's trading session?
Well, yes, the entire pack is in focus, and that is because Alcoa, which is the largest aluminium producer in the United States, released its results yesterday post-market hours. On a sequential basis, numbers were good, but they were tad below what the street was working with. Revenues were flat on a quarter-on-quarter basis for Alcoa, but the commentary becomes very optimistic. Realizations have risen this quarter, and as far as quarter 2 results are concerned, over here also they are pretty optimistic. They say higher volumes, higher realizations and lower raw material prices will aid quarter 2 numbers. So on the back of this results and commentary that has come in from Alcoa, all of these Indian counters are in focus today.
Okay, let's move on and talk about Bandhan Bank then. Vaishali, how are the charts for this one?
So this is one of the banks which I think has really not participated in the bank sector, and this is gradually getting into momentum. So I think the stock is looking very favorable for our next target of 250. So I would say it's a buy with a support of 200.
All right, so that's the take coming in on Bandhan Bank, but let's put the spotlight on the earnings candidate of the day, and that is HCL Tech. Makshi, what are we expecting?
Well, Cheryl, we're expecting a rather somber set of numbers from HCL Tech. Now, dollar revenue is seen at 3,220 million, which is a downtick of nearly 0.1%. Rupee revenue is, however, expected to come in at flat at around 26,530 crores. EBITDA, the EBIT margin rather, is expected to see a downtick of nearly 140 basis points to 18.2%, while PAT is expected to decline by nearly 5% to 3,860 crores. We're expecting CC revenue growth to come in anywhere between -2% to +1%. Now, what are some of the important things that you should be watching for in this result would be the FY24 guidance for the company, the commentary on ramp downs, cancellations, some of the levers to increase margins to normalized band, as well as the changes to hiring plans in FY24. So that is the news. So that is the preview for HCL Tech. A somber set of numbers is what we're working with, and just ahead of its earnings, the stock is up nearly 0.5%.
Okay, that's HCL Tech, but we're going to slip into a very short break, viewers, and as we slip into a short break, let's listen into Atul Suri from Marathon Trends. What are his views on the IT sector, and why is he underweight on the IT sector?
Underweight IT, we just have one IT stock, but that also is a mid-cap IT stock which is actually pushing to lifetime highs. I have a feeling, Nikunj, that when I look at the IT stocks also, that the mid-cap and large-cap are behaving very differently. Okay. Right? If you see the large-cap stocks, we have those 4-5 marquee names. You'll find that they actually do not have much happening. The trend seems to be down. But even in the mid-cap space, there are 3, 4, 5 very good names, as I said, which are pushing towards lifetime highs.